In the world of investing, it's easy to get caught up in complexity. But what if I told you there's a simpler way? A way to achieve your financial goals without getting lost in a maze of investment products. That's the beauty of minimalist investing. It's about simplifying your finances and focusing on what truly matters. By tuning out the noise and focusing on fundamentals, you can build a portfolio that aligns with your values. So, if you're ready to simplify your finances and embark on a path to financial freedom, join me as we delve into the world of minimalist investing. Why does a minimalist investment portfolio work? The answer lies in its simplicity and efficiency. By focusing on a few core investments, you can minimize costs, reduce complexity, and streamline your investment strategy. This approach allows you to take advantage of the market's long-term upward trajectory without getting bogged down by constant trading or chasing fleeting market trends. Traditional investing often involves picking individual stocks, which can be time-consuming, risky, and emotionally draining. Minimalist investing, on the other hand, emphasizes diversification through low-cost index funds and ETFs. These investment vehicles provide broad market exposure, spreading your risk across hundreds or even thousands of securities. This diversified approach helps to mitigate losses and smooth out market volatility. When one sector or company underperforms, others can pick up the slack, ensuring that your portfolio remains resilient in the face of market fluctuations. This long-term perspective is key to achieving your financial goals and building lasting wealth. Moreover, minimalist investing promotes a disciplined, hands-off approach. By automating your investments and resisting the urge to time the market, you can avoid emotional decision-making and stay the course even during periods of uncertainty. This disciplined approach is crucial for maximizing returns and achieving your financial objectives. A minimalist investment portfolio is built on a foundation of simplicity and diversification. The core components typically include low-cost index funds and ETFs that track broad market indices, such as the S&P 500 or the total stock market index. These funds offer instant diversification, providing exposure to a wide range of companies across various sectors. For example, an investor seeking exposure to the U.S. stock market might consider investing in a low-cost S&P 500 index fund, such as the Vanguard S&P 500 ETF or the iShares Core S&P 500 ETF. These funds track the performance of the S&P 500 index, which comprises 500 of the largest publicly traded U.S. companies. In addition to U.S. stocks, a well-rounded minimalist portfolio might also include international stock funds, bond funds, and potentially real estate investment trusts, or REITs. International stock funds provide exposure to companies outside the U.S., further diversifying your portfolio and tapping into global growth opportunities. Bond funds, on the other hand, offer a measure of stability and income, acting as a counterbalance to the volatility of stocks. Finally, REITs provide exposure to the real estate market, which can serve as a hedge against inflation and offer diversification benefits. Building and maintaining a minimalist investment portfolio is surprisingly straightforward. Start by determining your asset allocation, which refers to the percentage of your portfolio you want to allocate to different asset classes, such as stocks and bonds. Your asset allocation should align with your risk tolerance, time horizon, and financial goals. Once you've determined your asset allocation, select a few low-cost index funds or ETFs that track the market indices you've chosen. Many online platforms, such as Vanguard, Fidelity, and Schwab, offer a wide selection of low-cost index funds and ETFs, making it easy to build a diversified portfolio. After you've invested your initial capital, set up automatic contributions to your investment accounts. This will ensure that you consistently invest over time, regardless of market fluctuations. Dollar cost averaging, a strategy that involves investing a fixed amount of money at regular intervals, can help to reduce the impact of market volatility and potentially enhance returns over time. Finally, review your portfolio periodically, perhaps annually or semi-annually, to ensure that your asset allocation remains aligned with your goals and risk tolerance. Rebalance your portfolio as needed by selling overperforming assets and buying underperforming ones to maintain your desired asset allocation. The beauty of simplicity. Reaping the rewards. Minimalist investing offers numerous benefits, both financial and psychological. Simplifying your investment strategy reduces stress, saves time, and enhances returns. Focus on what truly matters, knowing your finances are working for you. Minimalist investing reduces costs by minimizing expense ratios. Choose low-cost index funds and ETFs to maximize returns. This approach promotes a long-term perspective, crucial for financial goals. Avoid emotional decisions by tuning out market noise. Ride out market fluctuations and benefit from long-term growth. Minimalist investing provides peace of mind and aligns with long-term objectives. Focus on your career, relationships, and personal well-being. Time-tested strategies for long-term success. Minimalist investing embraces time-tested strategies that have proven successful over the long haul. One such strategy is buy and hold investing, which involves purchasing investments with the intention of holding them for an extended period, typically years or even decades. This approach is based on the belief that over time, the stock market tends to rise in value, despite short-term fluctuations. By holding on to your investments through thick and thin, you can benefit from the market's long-term growth potential and avoid the risks associated with frequent trading. Another key strategy is diversification, which involves spreading your investments across different asset classes, sectors, and geographies. This diversification helps to mitigate risk by ensuring that your portfolio is not overly reliant on the performance of any single investment. Finally, minimalist investing emphasizes the importance of patience and discipline. Building wealth takes time, and it's essential to stay the course even during periods of market volatility. By remaining patient, disciplined, and focused on your long-term goals, you can weather market storms and achieve financial success. Navigating market volatility with confidence. Market volatility is an inherent part of investing, and even the most seasoned investors experience periods of uncertainty and fluctuations. However, minimalist investing provides a framework for navigating market volatility with confidence and staying the course, even when the going gets tough. One way to manage market volatility is to maintain a long-term perspective. Remember that short-term market fluctuations are inevitable, and they should not deter you from your long-term investment goals. By focusing on the bigger picture and reminding yourself of your investment horizon, you can avoid making rash decisions based on short-term market movements. Another helpful strategy is to focus on what you can control. You can't control the direction of the market, but you can control your investment strategy, your asset allocation, and your savings rate. By focusing on the factors within your control, you can maintain a sense of agency and navigate market volatility with greater confidence. Finally, remember that market downturns can present buying opportunities. When stock prices decline, it can be an opportune time to invest more money at lower prices, potentially enhancing your long-term returns. By viewing market corrections as opportunities rather than threats, you can turn volatility to your advantage. Achieving financial zen. Peace of mind through minimalism. Minimalist investing is more than just a financial strategy. It's a philosophy that extends to all aspects of your financial life. By simplifying your finances, you can reduce stress, increase clarity, and achieve a sense of financial zen. This peace of mind allows you to focus on what truly matters in life, knowing that your finances are in order. One way to achieve financial zen is to automate your finances. Set up automatic bill payments, automatic savings contributions, and automatic investment contributions. This will free up mental bandwidth and ensure that your finances are managed efficiently without requiring constant attention. Another helpful strategy is to declutter your financial life. Close unused credit cards, consolidate your accounts, and minimize unnecessary financial products or services. By simplifying your financial landscape, you can reduce clutter, gain clarity, and make more informed financial decisions. Finally, practice gratitude for what you have. Instead of constantly striving for more, take time to appreciate your current financial situation and acknowledge how far you've come. This shift in perspective can foster contentment, reduce financial stress, and enhance your overall well-being. Your path to financial freedom. Minimalist investing is about empowerment and taking control of your finances. Simplify your strategy and align investments with your values and goals. Embrace minimalist investing to create a path to financial freedom. Financial freedom means different things to different people. It might mean early retirement or pursuing passions without constraints. Minimalist investing provides a framework for achieving your goals. Remember, it's a journey, not a destination. Stay focused, disciplined, and continuously educate yourself. Seek out resources and connect with like-minded individuals. Achieve financial freedom and live a life of purpose and abundance. Thanks for watching, and if you found this video helpful, don't forget to like, subscribe, and hit the bell icon so you never miss out on more wealth-building tips. I'll see you in the next one.